Good morning or happy midday, wherever you're dialing in from. Welcome to the Saxo Spotlight session. My name is Jessica Amir, and I'm a market strategist. And I'm joined by our esteemed colleague, Redmond Wong, who's also a strategist, and he covers the Greater China region. And what a time to be speaking about China. So, I guess where do we start? So, first, from the outset, we must start by saying we've seen a absolute risk on frenzy, and this is on the back of firstly the weaker than expected US CPI last week. So CPI unexpectedly fell, and then secondly we had China introducing I guess some COVID restrictions, and then at the weekend they introduced a 16 point property stimulus plan. So all in all, we've seen equities rally. If we think about just the major indices, so the tech-heavy Nasdaq. That posted its best week since June. So too did the broader S&P 500. So last week, if you think about the exceptional gains, what it meant in terms of percentage terms, the Nasdaq 100 was up 9%, and the S&P 500 was up 6. So I guess now we turn to can this continue? What's standing in its way this week is a suite of economic news. So we think the rally could continue. However, there's lots of catalysts in the way this week. We have lots of economic data on tap, including US housing starts, jobless claims, and Fed speakers. But Redmond can speak about that, and then I'll speak about Nvidia. But let's just welcome Redmond to the chat. Redmond, can you tell us? What do you think is the most important thing that investors should be watching this week?
Yeah, first on the US, and because since there was a softer CPI last week and given some hope for some slower pace for the Fed to ease, or maybe the chance that terminal rates may end up not as high as the market fear. So it's still unknown, but because there's only 1 month data. So this week, and there are a couple of things is important. I mean, the PPI, and that will be tomorrow. Usually PPI is less important relative to CPI and also other data, but the important thing is on the CPI last week, the healthcare components was one of the items dragged down the CPI, the core CPI, and to calculate the core PCE. And that is the inflation gauge that the Fed watch rather than only the CPI, and they more focus on the PCE. And when the PCE is calculated, and they use the healthcare component in the PPI, healthcare cost component in the PPI to estimate the PCE. So that makes this month PPI, especially the breakdown and on the in the healthcare cost, will be quite interesting. That will shed some light on whether the PCE will also confirm the softer core CPI. So that is one thing. The second thing is it will be interesting to see whether there will be some pushback from the Fed officials to a slower path for hiking. And so interestingly, it would be from Chris Waller. And Chris Waller was one of the person who Governor Waller is one of those who proposed initially about they will not stop until we see CPI print going below 3% substantially for some time. So it's rather hawkish, and he will be speaking today and again on Wednesday. So it will be interesting to see whether he will push back among all the others, and we have quite a number of them will be speaking this week. So these are the two things I think investor will be watch closely this week in the US. in China. And yeah, I mean, we will be having those October activity data coming up in China, industrial production, retail sales, and also we will have the medium-term lending facility fixing the rate. But I think at the current juncture, probably that will be less important, because it's now the more important is looking at how those fine-tuning 20 items and 20 measures in the in pandemic control will be implemented when the number of cases has recently been shooting up, and over the weekend the number of new cases, domestic new cases in China in COVID is went above 14,000. And so we will see that whether the government will be especially the local government will implement a slightly softer approach, and that would be good news. And so that's something we need to watch very closely. And also the property and the 16 measures is launched by the PBOC and the Banking and Insurance Commission, and they are basically telling the banks and financial institutions to treat the private enterprises more equally, private enterprise developer more equally as this SOE, and also relax some of those temporarily relax some of the cap on from the bank and financial institutions to lend to developers, because many of those banks have already a very large lending loan portfolio, so they may go. I mean, they in the past they were capped by certain ceiling, the free red line for the banking sector on top of the red line for the developer. So that is also something we need to watch and see how that is implemented, whether banks are willing to really lend and support the developers. And I think these are the a few things I think is most important. Of course, the last is but not least is President Biden meeting today in Bali. So so let's see what's coming up there, and see whether any sign of easing of tension, geopolitical tension between China and the U.S. I pass it back to you now.
Yeah, Redmond, thank you. There's definitely lots to look at. So you've highlighted four major things. So it's really, really important to watch out for those as for the next catalyst. But I think it'd be remiss if we didn't say that the market is looking ahead to the fact and assessing the economic implications of China potentially easing restrictions, and also based on the cold hard facts that were released at the weekend, that the 16-point property stimulus plan, and that is why commodities are moving higher. And the third thing is that we've got to remember that the market is forward looking, and they're now assessing the likelihood that the Federal Reserve has got ammunition to potentially be more dovish, as in potentially only hike rates by maybe 0.5% next month. But of course, we wait for next month's all important CPI and jobs reports, which are out in the first and second weeks of December. But for now, it's very much risk on. So what do investors need to know from this perspective when it comes to um, equity markets? Well, we spoke about the rally likely being continuing, or likely to continue, in the broader S&P 500 and the Nasdaq. However, the market could take a haircut if we do get stronger than expected economic news this week, or if the Fed speakers do come out and saying there's more ways to go. So just to reiterate, we think the rally has got potentially more room to go until we get further evidence to say that the Fed may need to be more aggressive. The economic, well, that's I guess that's the economic catalyst. If you think about the equity catalyst, Nvidia will be a big one to watch. So Nvidia this week, the chip maker, they do report third quarter results on Wednesday. So if you have a look at consensus, what the broad market is expecting, the market thinks that their profits will be 71 cents per share. That's from revenue of $5.8 billion. So On Wednesday, the market would be paying really close attention to Nvidia. Keep it on your radar because their shares are down 51% from their high. So they've come down a long way, but ladies and gentlemen, they've actually rallied up 42% over the past 4 weeks. So the results will be highly anticipated on hopes that their outlook might enable this rally to continue. And Peter Garnery, our head of equity strategy, did an exceptional note and encourage you to look at that. And just lastly, from my perspective, and the second thing that I really wanted to mention is that commodities are rallying quite significantly. Again, forward looking on hopes that China will ease restrictions, and then on top of the cold hard facts of the property stimulus. So the copper price is up 5%. The copper price rose 5% last week. The lithium price, secondly, that's also higher. Lithium prices are now up 120% year to date. And thirdly, the iron ore price is back above $90. So if you look at how this is translated to commodity moves, we know the most, I guess, the biggest export by dollar terms out of Australia is iron ore, and as a result, Fortescue Metals, their shares have gapped up today. They've made an exceptional move. They're up almost 10% higher. So that's one to watch. Another stock to watch in the commodity space is BHP, the world's biggest commodity diversified giant. BHP shares listed in New York and listed on Australia, depending on wherever you like to trade those. They're both now above their 200-day moving average. And this could be seen as a technical sign that this rally could continue. So we are continuing to watch BHP because the market is forward looking and they're thinking that BHP's profits and earnings may pick up in anticipation of the underlying commodity prices moving higher. So that's something to keep an eye on. And just lastly, from my end, I'm doing encourage you to also look at two things. So lithium stocks and also down under in Australia, look at tech ETFs. So the tech ETF, ATEC, is up for the fourth straight week. It's up 18% off its lows. It's still got a fair way to recover. It's almost got 30% to jump back to its record high territory. But we know in Australia, our Reserve Bank was one of the first to pivot and become dovish, as in be more conservative with their rate hikes. And the market is also potentially thinking that they will pause rate hikes early next year. So this is why it could be worthwhile keeping an eye on tech ETFs like ATEC, that's ATEC. But I think they're kind of like the most important things. Redmond, is there anything else that's catching your eye that we should be aware of?
Yeah, I mean, since you're talking about earnings, and there's quite a bit of earnings coming out from the China, those mega cap China internet company this week, starting with Meituan today, and then you have Tencent, Alibaba, and JD.com. I mean, given the rather weak, still rather weak recovery in the China consumption, so that's after this strong rally in these stocks recently, so I think it's important to see how those numbers come out. And yes, I mean, the sentiment has improved in Chinese market, and a lot of good things happening at the same time last week, and that certainly was quite positive. And so I think that the market have and the positioning will also help since the position is not very big. And interesting though is last week on Friday is we have a lot of buying interest from a lot of bank in A share from Hong Kong Connect, but we have actually a net outflow from South Bank. So on Friday, so when the markets are doing well, and you will be actually it's more like a lot of foreign interest buying back into A share, rather than the other way around.
Interesting. And I think it'd be really worthwhile just rounding out on FX as well. We've been speaking a lot about in our commentary about the US dollar rolling over, and the US dollar has continued to fall away from its highs. I think one of the key FX pairs to watch is the Aussie dollar versus the US. So it's now up 9% from its low, and it's gained extra legs on the back of what we've been speaking about, China's property, I guess, if you can call it, if you will, China's property rescue package. But I think this is going to be something to watch. On top of that, China's shortening their quarantining. But I think we need to be just paying close attention here to the Aussie dollar. Remember, the market is forward looking. They're looking at hopes that that commodity demand will continue to pick up, which is why the iron ore price is higher. Commodities. In the commodity space, copper and lithium. And I think this is going to be something continue to watch, particularly with the Reserve Bank meeting minutes out tomorrow. This could be another catalyst for the Aussie dollar against the US to continue to rally, as well as for all those other reasons that we highlighted. Um, that we're getting lots of economic news this week, and lots of Fed talks are on tap. So more potential downside for the USD, but I don't know. Could the USD pivot and then head back? Head back. We'll have to wait and see if the Fed moves and becomes more hawkish. Particularly interesting to hear from Cash Kari, who speaks on Thursday. But I think that's it from me. Redmond, did you have any final comments or thoughts before we round out?
Yeah, I think that's we covered pretty much everything, but the crypto space, I think, will be also we will need to pay attention of any spillover effect and any what's the aftermath of the FTX filing for Chapter 11, and so far the Bitcoin trading rather steady over the weekend. But I think, yeah, I mean, that is still something bear watching. Yeah, I mean, it's whether that will affect other companies and also and other asset classes.
Yeah, absolutely. And speaking about asset classes, we just have to, I guess, it'd be really worthwhile reflecting on our equity baskets that are kind of spread, well, I guess they're 100% diversified in equities, I should say, but they're spread across different sectors, and we're continuing to see the commodity sectors dominate, and commodities are the best performing equity basket, followed by defense year to date. So that's something to keep an eye on. But as always, when putting together your asset allocation, it'd be worthwhile keeping an eye on cryptocurrencies, as Redmond has just mentioned. But apologies, we've gone over time. But ladies and gentlemen, thank you so much for joining Redmond Wong.
Can I just add one more
Yep,
thing? Because
Redmond,
I think last week we
please,
talked about
please do.
the 40-60 portfolio, 60-40 portfolio. Actually, they did a
Yep, good timing.
for a very long time, and for a long while they did actually very well on Thursday and Friday, and with both bonds and equity rallying very sharply. So and that's something just want to mention when we close. Yeah.
Yep, absolutely. Good point. Yeah, it's worthwhile mentioning as well that the Aussie 10-year bond is higher as well today. This is all, despite the RBA being, quite dovish. So yeah, definitely, Redmond, that highlights, the rationale and potential consideration for investors to consider looking at bonds as a means of diversification, and also a way to cushion your portfolio from market impacts as well. But thank you so much, everyone, for tuning in. And on behalf of Redmond Wong and myself, Jessica Amir, we wish you a wonderful week, and keep posted to Saxo's website for our daily note, as well as our evening note from the European team. Have a wonderful day and week, and reach out to your GST or your RM for any questions, feedback, or comments. Thank you so much, everyone. Bye for now.